Thanks for joining. It's George Masri, the host of the Wall Off podcast. I interviewed Scott Dillingham today, who is a mortgage broker with LendCity Mortgages. Nice guy, based out of Windsor, Ontario. It was one of my first times actually interacting with him. We spoke in the past. He works with a lot of real estate investors, which was really cool. And we talked about different strategies, including how to finance unlimited properties with A-lender rates. So we discussed how to do that. We talked about lender cashback for mortgages, which I didn't even know existed, to be honest. So your down payment cashback. And we kind of talked about that, and so you'll have to tune in to find out what we discussed. We also talked about credit unions with great rates. We talked about the current market. We talked about discharging your current mortgage, so the fees that you have to pay, your penalties. I had an experience where I was quoted a certain penalty, and then the actual penalty ended up being much higher when I refinanced. So we discussed how to avoid that. Lots of good things in here. I hope you'll enjoy. And if you guys are looking, again, I may have mentioned this once or twice in the past, but if you're looking for 4 to 6 unit buildings in the Golden Horseshoe area, I'm your guy. Come talk to me. Reach out to me. Go to welloff.ca. Either we can do something together, or I can get you in touch with some off-market opportunities. So reach out. I look forward to hearing from you guys. Make sure to subscribe if you're watching on YouTube, and make sure to like this and leave a review on iTunes. Thank you. Enjoy the show. Welcome to the Wall Off podcast, where the goal is to motivate, inspire, and share success principles. I'm here with Scott Dillingham today, who is with LendCity Mortgages. He started his own kind of little sub-brokerage there, and he helps thousands of investors, or has helped thousands over the span of 10 years, and they focus on rental property financing. He's also got free education for investors. He writes tons of articles there, and he also has this really cool thing where he creates an unlimited investor property purchasing roadmap, all with A-lenders, which I'm curious to hear about. So Scott, welcome to the show.
Yeah, thanks so much for having me, George. I really appreciate it. I'm excited.
Good. Me too. So let's get started by I always ask about your childhood. Where'd you grow up? Tell me 1 or 2 things you remember from your childhood.
Yeah, so my childhood was different, actually. My mom and dad, they split up when we were younger, so we moved from the States to Canada. And I've been here since, I think, 5-ish. So we grew up here, and I don't know, I just always knew that I wanted to be an entrepreneur. I knew I wanted to own my own business and do my own thing. So I got into trouble a little bit when I was little because I hated authority. I hated being told what to do. I always wanted to be my own boss, and I grew out of the trouble stuff, but I managed to be my own boss. So I did what I always planned to do. So it worked out.
Awesome. Well, that's great. Where did you live in the States?
Well, I was born in Maine. So it was in Maine. And then again, we moved here when I was little. I don't remember it, much. Obviously, yeah. I remember it now when I visit family, but yeah, growing up, I just mostly remember Canada.
Do you know why your family moved from Maine?
Yeah, my dad, my stepdad, sorry, he was an announcer. So there's a local racetrack, and he did stuff for like non-popular wrestling companies, and he would be their announcer. So then they hired him. So they sponsored our whole family to move down here so he could announce at the raceway.
Wow, that's interesting.
So, yeah, so he went on and started doing more professional stuff. So obviously I moved out of the house, so I lost track of what he's doing, and he separated with my mom. So, but he kept announcing and doing well, and we just stayed here. So,
Did you ever look into announcing yourself?
No, it wasn't my thing.
Okay.
No,
fair enough.
It's interesting, but yeah, not my thing.
Okay. All right. So you're based out of, is it Windsor where you're based out of? Okay. But you work with people all over Ontario pretty much?
Yeah. So from Windsor to Ottawa, we have it down pat. Like we've got the appraisers, property managers, we've got the whole team sort of set up from here to there.
Yeah. So how did you start working with people that were in, say, Oakville or Toronto or Mississauga or whatever the case might be?
Yeah, I started with this company. They were called Down Payment Assistance, and they were owned by the RTO partner. So these guys, they set up rent-to-owns, and we had a program at the bank that I was working for where a borrower could borrow their down payment. So we actually still have that program available as a broker now. But what was different was that the lender that I was working at, they allowed, so you needed a 5% down program, or down payment, sorry, but the lender would give you 5% cash back. So I met up with them and I'm like, hey, you guys are doing this down payment loan assistance program. I can get your money back, because they were borrowing it from like private investors and stuff. And I'm like, I can get you your money back right away if you work with us and send us your clients. So it spread from there. And then they introduced me to some realtors, you know, at an office that you used to work at. And then it just grew from there, and it just kept going and going and going. So
that's cool. So this was probably only for owner occupied homes, right?
Yes. Yes.
Right. That's interesting.
It's still available, the Flex Down, but the cash back now it's at 3% is the most that we have access to. Where before it was 5%. So we could get the client the whole down payment back to them.
Okay, so is this with an A lender that you're talking about? Really?
Yep.
Okay, can you tell me more about that? I'm interested.
Yeah. So it's called CMHC Flex Down.
Okay.
So it allows you to borrow your down payment from any source. Okay, which is great. But the thing is if you're borrowing your down payment and then you're borrowing for your house, sometimes those payments can be hard to make, right? When you have all these payments. So we would give the client the cashback mortgage so they could pay off where they borrowed their down payment from.
Interesting.
So the cashback, that's sort of gone, the full amount, but the ability to borrow your down payment to qualify is still there if you've got a 680 credit score or higher.
Okay. So just to kind of clarify, to make sure I'm getting this right, the CMHC Flex Down, so it's a CMHC product. Is that in combination with a bank's loan? Yeah. Okay.
Yes.
So you get a mortgage from the bank, and then the CMHC product allows you to recoup the 3% of the down payment that you put.
Sorry. Let me elaborate. CMHC allows the borrower to borrow their down payments, but it's the lender that has the cash back. So you got to do this program with a preferred lender with cash back, so you can prepay or pay back most of your borrowing for the down payment. Okay. So even a gift, like normally a gift is not allowed to be repaid, or so that, so they say. Mm-hmm. But with this, you can say, my dad's giving me the money, I'm going to pay him back, after closing, and it's fine under this program. So CMHC, they do charge an increased premium.
Okay.
Because it's qualified under they call it non-traditional down payment program. Mm-hmm. So the CMHC fee is just a little bit higher.
So is that just on the small portion of the down payment that you're getting a cashback on, that the premium's higher, or is it on the entire mortgage?
On the entire mortgage.
Oh, okay. Slightly higher premium. Are the rates a little bit higher with that program as well?
No, you can get a regular mortgage. If you want the cash back, the rates are higher at that point. But when you look at it in hindsight, what are you going to pay if you charge your down payment, say, to a credit card versus your mortgage? So it'll be better to have the cash back in the mortgage versus a 19 or 20% credit card payment.
Right. So who would, what kind of person would benefit from this program?
It would be somebody, more than likely a first-time buyer,
okay,
who's got great credit. They just lack the down payment,
okay,
which is anybody out of school, right? You get out of school, you've got these bills, and so you're saving. So that's who this is probably best for.
Okay, so what you're saying is that with this program, you end up paying only 2% of the purchase price as opposed to a minimum of 5% as a down payment?
Yeah, so it's still got to be 5% down as a whole, but they allow you to borrow it. So technically, you're borrowing your whole house purchase.
Okay.
Your
so
down payment and the purchase price.
Okay, so it's not. So I must have had it confused with the other thing you mentioned about 3% cash back. That's not the case here. It could be the whole 5%.
Yeah, so so you can borrow the whole, exactly. You borrow the whole 5%. But the cashback comes into play if you've borrowed the funds from, say, your credit card.
Yes.
Because your credit card is going to have a higher interest. So then you get the cash back on the mortgage and pay the bulk of that off.
Okay, so it's kind of like two separate things. I know I'm asking a lot of questions about this, but
It's okay.
it's almost like two separate things. One is a program that allows you to borrow your down payment, and the
Yes.
second is the program that gives you cash back on the borrowed down payment.
Well, it gives you cash back on your mortgage to pay back the borrowed down payment.
Okay. So you're going to be at 100% loan to value in that case, right?
Well, the mortgage is still technically 95% loan to value,
Okay.
but as a whole, for what you actually owe on the house, yeah, it's 100%.
Interesting. I had no idea. I've spoken to a lot of mortgage brokers. I had no idea this existed.
Yeah, that's how I got started. That was my initial program, and it worked really well, and that's how the network spread so far.
Mm-hmm.
But then I just, I'm an investor, and I just like investing, so it just naturally flocked to that. But yeah, that's where I got started.
Cool. We might as well get into the like the meat and potatoes here, because I was wondering about your unlimited investor purchasing with A-lenders. Can you tell us a little bit about that?
Yeah, so just being in mortgages, we would get referrals from brokers all the time saying we can only do X amount of properties, or else we've got to go to a B lender, a private lender. So I was a little leery when I left the bank to the broker channel, because I was like, they're working with me. How am I going to get this done with clients? So I was a little concerned, but I really dug some deep digging into lenders' policies. And so it's a pretty common approach to many brokers in the beginning, in the sense that we're going to max you out with the big banks and non-traditional banks first. And then from there's a couple of odd lenders that'll do 2 or 3 properties, regardless of how many that you have in total. Still A lenders, A lending rates. But then from there, most brokers that I've seen, now this is maybe not obviously all of them, but just from my experience, they would then send them to a B lender to continue to grow. But we don't have to do that. We have access to some credit unions who will do this at A lending rates that will do unlimited rental properties. Mm-hmm. And we even have some non-bank lenders, like we've got one lender is offering a 10 properties. Another lender's offering 12. So we just max the client out on those lenders first, and then we end up going to the credit union, because the only thing with the credit union is they have a 25-year amortization instead of a 30.
Okay, so these lenders that you said that'll go to 10 or whatever, do they offer HELOCs as well and that type of stuff?
Not really. They do, but for owner-occupied homes, not for the rentals. So that's why you want to get those products on the first group.
Yeah.
Like the first 5 to 10 properties, you want to get those lines of credit there.
Okay, and how long are the terms typically with these lenders? Are you getting a 1-year term or a 5-year term?
No, they're 5 years. So we just did one. It was the client's 12th property. It was a 5-year fix at 2.39. So it's a little higher because the rates are around 2% right now for, big banks financing. So it's a little bit higher, but still it's amazing rates in comparison to B lending.
Yeah, definitely. Okay, that's cool.
Oh, yeah.
And then I guess your option would be to refinance it if you needed. Are you able to do that with these lenders? Yeah, you could just you pay the penalty, whatever the case might be.
Yep, exactly. With COVID, some of the lenders have scaled back from 80% to 75%. Not all of them have, but some of them have right now, just because they're trying to make sure that the market is not going to crash or anything like that. But I suspect, once the deferrals are done and they really have the data on who was late and what the losses are, I think if it's not nearly what they thought it was going to be, I think it'll resume more to lending as usual.
Mm-hmm. Okay. What are you seeing right now? Because obviously there's a lot of uncertainty. We're in October now at the time of this recording. There's some uncertainty with lenders like Scotiabank isn't allowing, from my understanding, you to use your HELOC for the down payment. I think they're the only lender so far, major lender, that has made that decision. Am I right?
To my knowledge, yes. So they stopped that maybe a couple months ago, actually.
Yeah.
So I think they were getting, because same thing happened when I was at CIBC, and when I was there, policy changes happened and they scaled back their program. So I think the same thing is happening with Scotia. They probably got their market share in rentals was probably too high. So the governing body said, you've got to scale that back a little bit. So I think that's probably what they're doing, because I've seen that happen, like I said, with other banks.
Yeah. Is that also the case for owner occupied? If you're getting a mortgage through Scotiabank for your primary residence, you're also not able to use a HELOC in that case, right?
That is a great question. I honestly don't know that because I don't do much owner occupied. It's mainly rentals.
Yeah.
So, and for owner occupied, we would generally work with, there's a few other lenders that we prefer. So that is a great question. I will find that out for you though and let you know.
Sure. What is it about, just out of curiosity, for owner occupied? Why is it that you prefer other lenders over Scotia? Just out of curiosity.
So I try to get the clients the best rates possible, and that's not always the case with the big banks. Sometimes it is, but I'm going to say 80% of the time it's not. And then secondly is mortgage like flexibility. Your mortgage prepayments and stuff with the non-bank lenders are better, and the mortgage penalties tend to be smaller from what I'm finding. I don't want to name names and upset lenders, but there are many non-bank lenders where the penalties are half or even a quarter of what a big bank would be charging. Mm-hmm. So it just depends on the investor. But some people say, you know what, I only want to work with the big bank, and then then of course we do. But if they don't care, well, we prefer the not a bank.
Mm-hmm. So what are you seeing in the market these days? What are your thoughts on what's happening? And what's it like in Windsor too? What's the Windsor market like?
Windsor market's on fire. It's on fire. It's definitely a seller's market. There's a lot less inventory than buyers. I see the market cooling as a whole, like there's less listings and less activity. But on the flip side, I see a lot of the buyers that wanted to get something in the spring and summer that they couldn't because of all the bidding wars. I see them finally securing properties now. Mm-hmm. So it's really hard to say what will happen. But normally this time of year, like pre-COVID, it's always a little bit slower, maybe a month after back to school. And then it picks right back up. Christmas time, it might dip down a bit because people are on holidays and stuff. And then right after that, it's busy again. So
yeah, definitely. Yeah, we're in Toronto, well, specifically in North York. We were looking at a place. So my wife has a condo there, or my wife to be very soon. Yeah, thanks. She has a condo there that she had rented for about $2,300 a month last year.
Okay.
And it was furnished, so it was a little higher. And now we're seeing the rental rates in that building are closer to like $1,750, $1,800 for the same type of unit.
Wow.
And the prices have dropped by about 40 or 50 grand, which is interesting to see.
Yeah, that's huge. That hasn't happened here for sure.
Yeah.
But here was different because Windsor, we were behind. Toronto and GTA, you guys had appreciation for years. Windsor didn't until maybe 2 or 3 years ago. Windsor started to get some. So I feel like we lagged probably 3 or 4 years after you. So I think if you're starting to see a downturn, we probably will in a few years.
Well, I'm not saying like I only see that in the Toronto area, and I don't really do too much in Toronto. I know I own some real estate in like Hamilton and St. Catharines and Welland, and those are doing fine. Things are going well, but we're just starting to see like the core. It's kind of like the core of Toronto is starting to slow down a little bit, possibly, and then I don't know. We'll see what happens. It might just be a short blip.
Yeah, it's hard to say. Plus, I saw, and again, I don't follow the statistics too deeply and closely because whoever writes them, usually they're biased in one way or another. But I just saw a thing about all this extra inventory in Toronto, so maybe that's part of it. Mm-hmm. It could be.
I'm curious about Windsor. What is it that what's drawing investors in? Is it mostly for student housing, or is there anything else? Are there like any major manufacturers or anything like that people are going to Windsor for?
Yeah, there's a lot going on here now as opposed to before. So students, yes, that's one, but generally overall, the cost of living here is a lot less. So you're getting someone that's selling a small home in Toronto where they might get $1 million, $1.5 million. Here, they can get the equivalent home for $250 to $300.
Yeah.
And they're banking the difference. So we're seeing a lot of people come here for that. But yes, we're getting 2 new bridges. So we have 1 bridge and 1 tunnel that goes to the States. We're getting 2 new bridges. We're getting a huge mega hospital. We pretty much the city, I kind of say it's kind of like a golden horseshoe scenario with Toronto because you've got the water around us on the one side, And then you have surrounding municipalities around Windsor on the other side. So there's no room to grow out. So now, like 2 years ago, a new condo, you would never hear of a new condo coming up. There was no cranes here. But now we have like 14 different condo projects going up. So it's the immigrations here, like things are really starting to happen here. So
Yeah. Cool. Interesting.
yeah.
So from a lending perspective, what are you seeing people are focusing on a lot right now? The investors that you're working with, are they buying a lot of single family homes, student rentals, multis?
It's a good mix. It's definitely a good mix. I'm seeing a lot more flippers than we used to before, especially because the appreciation right now makes sense. But it is a mix of everything because we do residential, commercial, like we do it all. So we see it all. Like we're refinancing a 200 unit apartment building here in Windsor. The guy wants to build another one. Like, so we're doing all kinds of different things.
Mm-hmm. Okay. So you're not really seeing a trend toward one thing or another. It's just a mix.
Not so much. Yeah. My focus would be on the regular homes if I'm going to invest in the area, because there's no more land. It's all spoken for.
Yeah.
So regular houses are starting to really go up in value here.
Mm-hmm. Okay. What advice do you have for someone who's building their portfolio? I know I've heard from other brokers that you need to like max out certain banks first. We kind of touched on that a little bit. I'm curious to know your take. Some brokers will say you need to max out this bank first, then that bank, and then you go on to this bank so that you can get as many properties as possible. What are your thoughts on that?
Yeah, no, that is exactly what we do. It's the same type of process, but it depends on the scenario, right? Because some lenders only use half of the rent. So if we need to use a lender that uses 80% or 100% to qualify the client based on their income, even though this lender we might normally hit up when a client has 8 or 10 properties, maybe we have to use them on this guy's first property because of his debt to income ratio. So it fully depends, but yeah, you always max out with the big banks and non-bank lenders first and then work your way out.
Sure. And I know some banks, like for example, if you are in the process of evicting a tenant and you're having issues and they haven't paid for 3, 4, or 5 months, some banks will just say, hey, sorry, we're not going to finance you because it impacts your ratios. Whereas other banks will use market rents.
Yep. We like to work with the lenders that use the market rents for sure.
Mm-hmm.
That's something that I'm used to from being at the bank. So I was already comfortable with doing that. So to work with a lender that doesn't do that, it's a sticking point. So we always work with the lenders that'll use the market rents, because even when a client is buying it vacant, like sometimes they're not going to have a lease, right? Because it's a vacant property. So you want a lender that uses fair market rents. Absolutely.
Right. And what about refinances right now? What are you guys seeing from that end? Are they being a little bit tighter because of the certain situation, or are they still evaluating properties like usual?
Yeah, it's tighter. One of the things that I've really noticed that they're doing now is now they want the clients, and this is all the lenders mostly, they want the client's bank statements to confirm that rental income is coming in.
Okay.
So that's a new thing. That was never before. They would use the leases or the T1 generals to confirm income, which they still want, but now they also want bank statements to confirm that they're not impacted by COVID. Mm-hmm. So that's a new thing. So hopefully that doesn't last too much longer, but yeah, that's real.
Yeah. Okay. That's interesting. What about interest rates? What are you guys, I know like you don't really have insider information, but what are your thoughts on where the interest rates are headed?
It's still heading down. Yeah, I actually had a call a couple of days ago with one of the lenders, and he opened up to me and he said they had some board meetings and they're discussing the bonds and the rates, and he said it's going down. So he said for owner occupied, he said rental will follow too, but owner occupied, insured with CMHC, they're always the best. He's saying we're going to see below 1.5 this year.
So are we talking about the prime rate going down or just kind of like the bank rate?
I'm not sure per se, but lender specific, they said that they had board meetings and talks and they're lowering below 1.5. Wow. And we should see it within a month. And this is on a 5-year fix, right? So I think other lenders you're going to see follow. So it's pretty crazy.
Yeah. Have you ever seen anything like that before, or is this the first time? No.
This time of year, they're always going up, right? They're seasonally adjusted. So usually the rates will go up in the fall and winter, but now it's weird that it's going down.
Yeah. So what do you make of all this? What should people do if rates are dropping below 1.5%?
I would definitely switch. Whether it's a rental or owner occupied, find out what your penalty is.
Yeah.
Look at the new rate. See if you're going to save money. If you will, take advantage of it.
Okay.
The Bank of Canada, before this happened, they wanted to raise rates, and they still want to raise rates, but they can't.
Yeah.
So if you're in the higher rate, like early this year, they were mid threes was a good rate. Like 3.5 was a great rate.
Yeah.
So now if you can get mid ones, I would do it. Like, find out your penalty. If it makes sense, do it. But look at the numbers. If it doesn't make sense, like, it's not worth it. But
well, how do you determine if it makes sense? Like, I can give you an example. I have a property that I got a fixed mortgage on, which was a mistake, obviously, but I think my rate was 3.89%, and
okay.
I still have a while left on it. So, how would you determine if it makes sense?
Okay. So what we do is we'd first have you find out your mortgage penalty.
Yeah.
And then we determine how long you have left of your term, and we can calculate what your interest expense will be for the rest of your term.
Can I stop you for a second?
Yeah.
Just to interrupt. So I've done that before where, like, I had a mortgage with TD. I went into the bank and they go on their computer and they're like, hey, this is your penalty. So I write it down, and then I ended up refinancing the property, and the penalty ended up being like 3 times more than what they told me. So how do I know? If there's no way for me to know what my penalty is other than to ask someone, how am I supposed to know?
Well, one of the tricks that I learned, so great question. One of the tricks is when you get quoted your penalty, don't get quoted as of today. That's what everybody does.
Yeah.
You want to get quoted as of 30 days from now.
Okay.
Because the penalty changes daily. So if you have them quote you in advance, like they'll do, even with your lawyer, right? If your lawyer requests a discharge statement, he sets a date, they calculate it and set it, and that's what it's set for. So usually if you're just going into the bank and saying, what's the penalty? It's as of today.
So it could be higher tomorrow?
Yes.
How?
Could be lower tomorrow too.
How does that make sense?
It's all based on the yield and all the different calculations that each lender has. They all calculate it differently, so I couldn't tell you the exact. But I do know that from working at a big bank, it's based on the day. So we would always calculate a month out, because a normal refinance takes about a month. So then you know exactly the rate that you're being given. And you can ask them, like, say, give me a discharge statement for 30 days from now. And then it's official. Like, it's not a quote, it'll be fully official.
Okay, so I can just give them that document and just say, hey, you guys told me this. You need to honor this penalty here. Not charge me 3 times more.
They may not, because they only quoted you as of that day. Yeah. But if you say, like, I'm selling in 30 days, give me my discharge statement for 30 days from now, it will be accurate.
Okay.
So that's one way.
Okay, sorry. So I cut you off. You were saying you need to check your penalty, and then...
Yep. And then so we check your penalty, we check your interest that you're going to pay for the rest of the term. And then we look at the new rates and we match up the term. So if you have 4 years left, we run it over 4 years and we see your total savings. So when you factor in your interest that you're saving and the penalty, if it's a positive number, then it makes financial sense to move forward.
Cool.
So it's pretty easy. It's black and white. You can see if it makes sense or not.
Yeah. It'll make a pretty substantial difference if you're getting like 2.5% lower on your rate.
Yep. I had a client, they were at 3.5. Now every mortgage is different because it's based on the size, but I think it was a small mortgage, like 200 grand. They were at 3.5, and we saved them, I think it was like 20 grand over 5 years of interest just by switching to a new term.
So in that case, are you refinancing the property, or are you kind of, like, if it's with the same lender, let's say, is there some other way to change the rate without refinancing and getting a brand new 5-year term, for example?
You can do that, but the lenders are going to charge you a penalty.
Yeah.
If you do that. So we've got some lenders that if you're just transferring the mortgage, they'll pay you. So I'll quote you one of the lenders right now. They're giving $3,000 to cover any mortgage penalty. And then they've got a rate that's, I believe it's like 1.8 right now. Maybe it's 1.84. So they'll do the complete transfer and pay $3,000 of your expenses to switch.
Cool.
But that's only a switch. So that's you just transfer your balance. If you add money to it, then it's considered a refinance and that promotion goes away. But that lender is all across Canada. So most brokers have one. So your client can visit the broker that they work with and get access to these lower rates.
Cool. Do you have any other tips for investors now in the current environment, or maybe even just general tips that can help investors?
It's really hard to say because there's so many different investors. There's so many niches.
Yeah.
We're personally really starting to get into commercial. If you're ever in the area, you should come to our LendCity. It's kind of like a WeWork. So we set it up for the basement. We have different realtors and real estate related companies that all rent our basement. And that is what I love is the commercial space, because every dollar of rent that you increase, your value goes up approximately $10. And it's hard to get that on residential, but you got to start somewhere. So we started with residential and then we converted to commercial, and it was the best thing that we did.
Mm-hmm. So you guys do commercial loans as well?
Yep.
Yeah. Interesting. Yep. Okay. So your advice is start looking into commercial.
Yeah. Like I would start because as you get buying multiple houses, you're like, okay, what next? I want something bigger and better. So as an investor, when you hit that stage, then I would start to look at commercial. Absolutely.
Mm-hmm. Just random question. Are you allowed to do your own mortgages?
I believe I am, but I never have.
Okay.
I never have.
That's like a barber who gets his hair cut by his friend.
Yeah, for sure. We have to let the lender know, like, this is my own mortgage, whatever. So they do extra due diligence. But yeah, I never have.
Okay. So probably a little bit easier to get someone else to do it.
I think so.
Yeah. Okay.
I think so.
All right. Sounds good. I know I've got a list here of questions. One of them was, what financing options do full-time flippers have access to? And why should they avoid big banks?
So the issue with the banks is if you flip multiple properties with the bank, they're going to stop lending to you. They're not in they're not in the business to lose money. And one of the VPs at my old bank, they said like it costs about a year for the bank to set up a mortgage, a year of interest payments, because they have to pay the underwriter, they have to pay the originator, right? There's all these fees to set it up. So if you're a flipper and you sell that home after 3 to 6 months, the bank is losing money. So they'll do it 1 or 2 times, but if you keep flipping, they cut you off. Mm-hmm. And then on top of that, there's potentially mortgage penalties. And I know some investors will go variable and stuff to minimize it. But if it's a lender that you want for a great low rate mortgage, you should never use them as a flipping lender because they'll cut you off. So our suggestion is to get an open private mortgage, because an open mortgage, you can pay it off at any point in time. So I'll give you an example. Say it's 9.99% annually, but it's open. Right? If you divide that 9.99 divided by 12 months, you're only paying 0.85 a month. So if it took you 2 months to flip, you're paying 1.6% interest, whatever setup fees that they have, like obviously they do charge fees, but that's it. So the interest rate can actually be less, and it's quick. They don't care how many times you do it, and you're good to go. They don't look at debt to income ratio as much as a bank does, and it's a lot easier.
Okay. So just to go back to what you said about banks cutting you off if you're flipping constantly, how does that work? Like, what do they do to identify you as somebody who's breaking the rules?
Well, so I've never seen the internal system, but I've seen it happen. So they just make a notation on the file of that client's file deep within the bank records. So whenever you do a mortgage for a client at the bank, they open the client's file, and every lender has their own name for it. But in there's an alert that'll come up and say, do not lend mortgages, professional flipper or whatever they input. Mm-hmm. Yeah, like they literally put notes there. I even had a client where they said, don't flip for 5 years. So that client could go back after 5 years. But yeah, they literally make those notes on that customer's file. Mm.
Interesting. Cool. Yeah, it's kind of cool to see that banks in a way are kind of just like they give and take with you. If you have a file, like especially if you have a good broker, then the broker can make certain things happen, whereas they might initially say no for whatever reason.
Yep.
Yeah.
Yep. And I would honestly too, like if you're considering a big bank, I would have your clients go through a broker to the big bank if that's what your client wants, whether it's a flip or whatever, because you're going to get that better knowledge than going to the bank directly. Some of the bank staff are excellent, but just from working there, I know that position where someone walks in and gets a mortgage, that's their entry level. You can get out of high school and work in that position.
Yeah.
So you risk being someone's very first mortgage client. You know what I mean? Where if you deal with a broker that works with the bank, then you get that experience, but you still get the bank to work with. So
yeah. I had a client, a lady who was probably like in her 50s, and she was looking into moving. So I wanted to introduce her to a broker, but she just kept telling me, I'm uncomfortable with that. I've always walked into a bank and just I speak to someone there, and I just feel more comfortable with that. And I was trying to understand it, because to me, I've never been that kind of person that would want to just walk into the bank and deal with the first person I see, because I've dealt with a lot of really bad people in the bank that provide terrible customer service. So what do you say to someone who has that kind of fear?
Yeah, like I find mostly it is the big banks. I think people, especially the older generation, they've heard stories of the lenders calling back their mortgage money and stuff like that. And I know that did happen with lenders a long time ago. But the thing is I think if they realize that they have access to banks through the broker, but then you get that expert level of knowledge. The other thing too is a lot of clients think brokers charge fees. And obviously, if it's a private or something unique, there will be a fee. But the banks, they actually pay us. So a broker should not be charging a fee if you're working with a bank, because the banks pay us. So there's none of that. Yeah.
Okay. So, kind of a separate question, but through private lending, I know it's possible sometimes to get borrowed funds for the down payment.
Yep.
So let's say you get a private first for 80%, and then for the other 20%, you get another private or a promissory note or something like that.
Yep.
So you guys have access to programs like that? Just out of curiosity.
Yeah. Like it's harder, of course, right?
Yeah.
When you're borrowing the full amount, it's harder for approval. But yes, there's lenders that allow that, even VTBs. If there's a 20% VTB, we just get the numbers of what that cost is, whether it's per month or a balloon payment or whatever it is. And we just let the lender know. And we say, this is what's happening. And usually they'll move forward. Now with the
on a private end, you're talking.
Yeah.
Yeah. Okay.
Yeah. The big banks are not going to want to see that.
Yeah. Big banks will not. Yeah, for sure. They don't do any VTBs anymore, right? Big banks, like they won't.
Just in the commercial, not on the residential.
No, I think in the past they used to allow it.
Yep.
Yeah. Just not anymore.
Yeah, not at least not during COVID. Not that I've seen for a while.
Yeah. Okay. Fair enough. All right, Scott. So before we jump into the next section, is there anything you want to add or anything you want to share?
No, I think just do your due diligence. That's the most important thing, and build the correct team, right? That's why I'm sure you're doing this, to educate people and have them learn about you. And I think that if they work with investors, I'm speaking of, if they work with people that specialize in investment properties, doesn't matter if it's a lawyer, insurance broker, whoever, the success rate of that individual client is going to skyrocket.
Mm-hmm. Definitely. Okay. Yep. So let's go to the random 5. I'm going to ask you 5 random questions, and you just tell me the first thing that comes to mind. And some of these questions are weird. I didn't create them. I just take them from somewhere. So just letting you know. What's the most interesting thing you can do with 400 pounds of cheddar cheese?
400 pounds of cheddar cheese. Well, the first thing that came to mind, which is a weird one, but just make a giant fondue.
Yeah.
And have some cheddar cheese dip food.
I was thinking about a cheddar cheese hot tub.
Nice. That would be fun.
Yeah. I don't know if it would be fun, but that's what came to mind. What animal would you most like to eat?
Oh my goodness. Chicken, I guess. I like chicken.
Yeah. Okay.
Yeah. There's no
Simple
funky
answer.
animals I'd want to eat. Yeah.
Yeah. All right. What problems will technology solve in the next 5 years, and what problems will it create?
That is a good question. As far as creating the problems, I think there's going to be a lot more identity theft because more stuff is going online. But as far as what it will create, I think more, I don't know. I could see it creating more jobs. I know a lot of people are scared of AI and they're thinking AI is going to take their jobs, but they still need people to program stuff. They still need people to fix. I don't know. I can see it opening up a whole new slew of jobs for people.
Yeah. Okay, cool. What odd talent do you have?
I can blink my eyes really, really fast.
Can you? Okay, let's see.
Do you want to see it? It's so weird.
Quickly.
I feel weird doing this for you, but there you go. That's my weird talent.
I don't think the camera can capture how fast you're moving. Just kidding. All right, cool. What success principle do you live by?
My thing that I believe in, it's not an official quote or anything. I just think if there's something that you want, whatever it is, just put your mind to it. No matter how big, no matter how small, you will always get it. If it is your dedication and that is what you want, you'll get it.
Mm-hmm. Awesome.
It's been my life, right? I always wanted to be an entrepreneur, and that was my focus, and here we are. So
great. Good advice. So I think that concludes things. How do people reach you, and what services, which is pretty obvious, but what services do you offer?
Yeah, so obviously my cell, we're on LendCity, so LendCity.ca is our website. It's really cool. You should check it out, actually. The way we've animated the site and stuff, it's really, really unique. But if you want to apply for the mortgage, you can do it right there. If you want to contact us and have a consultation, cash flow analysis, that type of stuff, we'll do that first. Then obviously we do mortgages, residential, commercial. We even actually do business finance. So we're helping, like we have one client who's buying an international bank. We have access to private equity. We're selling, one client is selling their real estate portfolio to a REIT. So we take care of that. Now, not me, actually, I have a guy that manages and runs that division, but yeah, we do a lot of private equity stuff.
Awesome. So I'll put a link to your website in the show notes. I appreciate you doing this, Scott, and thanks for sharing your story.
Yeah, no problem. Thanks for having me. It was great. I really appreciate it.
All right. Take care.
Yeah, you too.
Thanks once again for listening to another episode of the Well Off Podcast. Just want to remind you that if you do appreciate the content, all I ask is that you comment, maybe like it if you can on the platform that you're listening to it on, and finally share it with friends and family. I'd love to get the message out there, and it would mean a lot if you can share it. And finally, I just wanted to offer you, as a valued listener, a free copy to the Roadmap to Real Estate Investing, which is a document that I've put together which helps you identify what strategy would best suit your needs at this current time. You go over certain things that are included in this document step by step, and it'll hopefully provide you with some clarity. So have a look. You can go to www.welloff.ca/guide to download your free copy.